Okay team, welcome to Apex Trades, back with another I guess a bit of a stream idea. We have some of the guys from Discord also on board, so we're just going to run through more of a day trading exercise and an idea around how how I'd approach day trading for sure. We're not going to use real capital, but we are going to show some ideas around liquidation points, what your expectancy can be in terms of fees and stuff like that. So I'm going to assume, let's assume, right, that I'm going to use $1,000, right? $1,000 capital roughly equates to, if you 100x, so let's assume you've got a sub account, and on that sub account you've got $1,000. You multiply that by 1,000, which is effectively trading with $1 million. It's somewhere in the region of about, I don't know, 60, 70 Bitcoin in terms of your purchasing power, right? Now, roughly what that equates to for $1,000 is about $10 per basis point move. So let's assume you only want to use $500 capital. Well, that would be about $250. That would be $5 basis point move for you if you only wanted to risk $250 capital. As an example, that would roughly equate to about $2.50 per basis point move. So what I try to go for is about a $500 success rate. So if the markets are moving well and they're in a downward trend and I'm risking $1,000 capital, what that will roughly give me is about 100 basis points in terms of where I would be liquidated, and I would need about 50 basis points to hit that $500. So it's kind of a 1 to 2 risk to reward ratio in the sense that if you get liquidated, it'd be $1,000, but would have to go against you by 100 basis points versus 50 basis points to get $500 capital. But you don't, I mean, that's just a line in the sand, by the way. You don't need to necessarily, stick with that fee. You might want some less. And again, if you're only risking $250 capital, then $500 capital, then maybe your return on investment for 50 basis points would be $250, and per day maybe that's a good enough fee for you to earn from a risk to reward ratio. So obviously we're on BTC now. Now what I always like to do is to kind of determine the general movement. Now we're in a bit of a choppy sideways market at the moment, aren't we? We had this kind of huge, we're on the 1 minute chart, by the way. We had this huge big move to the upside overnight. I had well, I don't really want to talk about it because I'll get quite annoyed, but anyway, I should have let it run. Got a little bit nervous, and because I was sleeping, and instead of sitting here with like nearly $3,000 profit, I took $81 profit or $86 profit, whatever it was, something like that. Anyway, so what are we looking at? So market structure is always what you're looking for, aren't you? Breaking the structures, and then looking at where to get in, right? So what we're going to do, we're going to have we're going to represent orders, liquidation points, and stop losses, if we determine stop losses are required, as these lines, right? So these arrows here will represent our entry, and we'll have 3 of them, right? We'll call this one, I don't know, let's see, green for entry. We'll have red for liquidation, and let's say orange for stop loss. Okay, so it's going to be a bit boring just to watch and sit, but what we're waiting for is a structure. I mean, right now the structure to me tells me that we're moving down. We can see we had a higher high, then we had a lower high, higher high. Realistically, the way I'm looking at it is your main structure at your height. You've come back, is our second structure. Come back down is our third structure. Now what you're looking for is, are we going to come back somewhere around here? And this is where I'd be thinking about my entry, somewhere around there, which would still validate that this would be a downward move. I would have if my entry was 16,854, my liquidation would be 16,954, so my liquidation point would be 9, 16.9, 954. So remember, I'm risking $1,000. Let's just say 16.9. There, 5. Where am I? 5.4. Somewhere there, right? That's where my liquidation level would be. Now, realistically, where would your stop be? Well, you could take your stop just above the previous structure, which is either this one or this one, just to give you some room to move. So this is how we're going to go. Just because right now we're on a bit of a larger pullback. I mean, if I go to the 1 hour as an example, you know, maybe we're looking at, and this is where it pays to have a bit of knowledge about various things, but probably anticipating maybe we can come down as low as the 16,788, maybe the 0.5. So I'm going on the basis now. Number one, we're over pushed on the MFI, but obviously on this premium oscillator we've still got a bit to go, so obviously got to be mindful of that. But on the one, so I'm anticipating that we've still got more movement to the downside essentially. So you'd always need to look at your wider time frame and your wider picture. I'm going to just remove this out. But this is what I'm waiting for. So I'd have an entry here, and this would be my stop loss if I wanted to stop. That would be the case. And then you'd say, well, when would be your take profit? Well, realistically, you don't need to set a take profit. Your break of structure would effectively be your take profit, wouldn't it? So let's say, this is your first structure here. This is your second structure, and then this is your third structure. Higher high, lower high, lower high. Ignore these. These are just based upon the Lux Algo thing, and I don't think it gets every one of them right, because number one, it's you've got to determine yourself what you think the structure is. Now, the way I see it is, I think this is the first structure, this is the second structure, this is the third, this could be the fourth, and then so on and so forth. Basically higher high, lower high, lower high, lower high, lower low, lower low, lower low. Generally a move down. That's how I see it, right? So your stop loss, again, you want to give it some room to breathe. So you don't want to be too tight with your stop loss. Now, this may not be the entry. It could be that this is now the new lower high, and we need to be patient and wait for another one. But what you don't want to do, sometimes when you're on the minute time frame like now, what you see as smaller structures, when you go to like the 3-minute or the 5-minute, I mean, that's still about right. That still looks okay. But it would not invalidate this. It would not invalidate that we're on a downward move if the price comes up to here, simply because this is the structure: higher high, lower high, lower high, lower high. Coming up, it might invalidate this, but in a more I guess a longer term, this would still be fine. So again, because we're using high leverage, and our liquidation points kind of up here, there's quite a wide area of safety margin for me built into that. So as I say, it's about an 100 basis point move. That's correct, isn't it? 1845, so you want 16.945. 16.9, that's a bit down there. 16.9. 9. So that's your risk tolerance there. So I would lose $1,000 if the price comes to here. I mean, this, to be fair, you can use stop losses here, to be honest, because what you're trying to say is, well, look, if the price comes up here and invalidates this signal, then we've had to break a structure. Therefore, the new momentum would be up, and then you'd be waiting for a retest, and then you get up again, and then this is your new entry as a move to the upside. I don't think trading for me doesn't have to be complex. It doesn't. We have our swing ideas, which is just what we're doing on a shorter time frame, just on a much longer time frame, really. But as I say, we're waiting, coming up now. Invalidation would theoretically be here, because that would be a point that I wouldn't like to see as breach. So I'll put a stop there. Yeah, in fact, I will do that there, simply because if this comes down, retests that, or just breaks above that, and then goes down, you would still say that that's in a downward momentum, just because the way that, you know, it's just 50% of that move, isn't it? Let's have a look at that. If I take that, they would be 61, so 50. Yeah, that's fine. So I would have basically my stop loss would be above the 50% mark of that recent move to the downside. I think that's fair. Now, what would that be a loss of? Let's work that out. It's 22.5 basis points. 22.5, so it's $225 loss, yeah? Because it's about $10 per basis point. Now, if you are half that, then, you know, half that number again. And this is the boring world of day trading. You know, you've got to sit and wait for structures to come. By the way, if anyone wants to chime in and conversate, feel free to jump in from the server. Hey, who's that? Hey, Lex. All the very best, my good friend. All the very best. Now, obviously, we're risking higher capital here, yeah? Remember, we're using 100x leverage with $1,000 at risk. But it's like, forget about the important thing is forget about the actual risk side of stuff, because it's just numbers at the end of the day. You've got to be prepared to be able to say, well, if I lose everything, I lose everything. When I say everything, whatever you've set aside as your risk tolerance. So, I will risk $1,000. If that goes, so be it. My counter argument to that is, how talented are you in terms of being able to recognize market structure, being able to recognize direction of travel, being able to recognize when it's safe to get in and when it's safe to get out. All that kind of stuff needs to be in play. But also things like, you know, these kind of ideas here where you're looking at this order block area here. Now, these are only on 1 minute time frames. Now, are we going to get filled here, guys, or what? You see, come on, baby. So what would happen is, if this fills, I'm then looking for us to break this structure here, right? And then the idea is, once it's broken a couple of these structures, your stop loss then starts to move down above the new break of structure, and so on and so forth. And the idea being that realistically you can have a target to aim at and say, well, you know, $500 is the goal. However, sometimes these moves can just continue to go and go and go and go, and it's like, well, you know, took out at $500 when realistically it showed no sign of weakness, no sign of breaking of structure. Therefore, I could have perhaps held on a bit longer. Okay, so I think that would have been a fill. Yeah, so we'd have been filled at that point there. Nice. So stop loss is staying there. We're nowhere at a $225 loss of our $1,000 account if the price comes here. Liquidation point is up here, so we're well aware of where that is. The comforting factor is we've broken structure on this move here, so I think we'll have to see how it goes. Interesting element will be whether this provides the resistance, because it's an order block. Now remember, the full swing of this move is, that's kind of in the middle of your Fibonacci retracement. So right now it's still showing as bearish structure. The moment this becomes bullish structure for me is if it breaks this lower high, or kind of, you know, this 0.5 retracement. Then it's like, okay, so we've taken a $250 loss, and our original idea was or plan was still a plan that showed signs of a bearish continuation. However, as we know, things change all the time, and that's the key thing, really. The other thing I'm keeping my eye on is the fact that we've got this fair value gap here. So maybe, you know, I might decide to raise that above the fair value gap, because, you know, it would still be bearish structure if it came and snagged that 50% gap. What would that put my loss to? Let's see. $285, that would be. Okay, I'll take that. Now remember, guys, we're on isolated margin here, so this isn't like you can average in and average up and down. It's a protection way of saying, okay, committed, and, you know, this is, I believe in the conviction of your TA, and that's how you've got to kind of do it. Just kind of reviewing what the 15-minute looks like. So we do have some potential for more upwards momentum. 30 minutes. We are right down. However, on the Lux Algo Premium, we are topping out. Okay. Let's go back into the 1 minute. For me, this doesn't turn bullish unless this breaks here. Realistically, it really only turns bullish when it comes and claims this spot. I wish I had the replay mode on that you could just fast forward. This is why I don't really like day trading too much, because it can be quite boring. And you've got to just do a lot of screen watching, because really you can't really take your eyes off things, because you've got to know when to get in and when to get out. But we watch. You know, you could play this super safe, by the way, as well, but I don't recommend it really. You know, going too safe. I think you've got to be prepared to take some knocks on the chin, because if you bring your stop loss here, then there's a high chance you could just wick out. I mean, I think he is probably somewhere around this area. You don't have to be too precise, just a good idea that you say, well, if price comes up and maybe claims this fair value gap before coming back down, and that's great. Obviously, you've got to keep your eye on the higher time frames as well. Like we've just seen, the 30-minute is massively overexcited. So realistically, what I might think to do here is, if we do come out in any profit, maybe targeting this order block here as a TP, then maybe we'd look at, you know, moving into a long position. I think on the 1 hour though, yeah, 1 hour's looking rather overexcited. I think the 2 hour heart line, 4 hour heart line, so can go anyway, really. If I break this structure here, I will bring my stop loss down to here. Which should be break even. Ideally what you want is a really strong momentum. Now obviously, you know, we typically trade counter trend. In this scenario, it's a bit different. You are actually wanting to go with the trend because you're waiting for the pullback. When you get the pullback, you get in, and then you just ride it, whether it's up or down. So that's the idea really on the day trading side of stuff. Everything we're seeing here though is still very much bearish structure. If we came down here, it'd still be $180. If we came down to the next order block, $440. I'd like to see this structure get broken and then come back and claim this change of character here. We've come up and basically reclaimed this fair value gap here on the 1 minute. You can see here perfectly on that average 50%. On the shorter time frame, we are starting to top out a little bit, specifically on the premium. I'd like to see this come down. I mean, this would have been a great move here, but having said that, this printed only when this move came to the upside, I think, because the order block started at this point here. From an entry perspective, maybe that probably would have been a better area to get in, simply because it is a fair value gap. However, we just touched that, we didn't actually breach it, so I don't know if we would have been filled, because it was literally in and out. So I think probably it's where we got filled was probably about right, really. Okay, so now we're in very, very small profit. Now, one thing you could do, let's say the price came up to here. Okay, I could theoretically put a buy order in here, right? And then my locked in loss would be between here and here. But as the price starts to move up, I gain on the long and I lose on the short. But then maybe when I come up to here, I take the profit from the long and then I put a short order in here. So my short, that's down here, sorry, my short, that's here. I now have a short here. I've taken profit from here to here. So when I so if I just throw that out so it becomes a bit clearer, this is the idea of hedging. So let's say rather than putting a stop loss, I put a buy order in here, right? So the delta between your win and loss is, where's my price range is that one, yeah. So the delta between here and here is 24 basis points. Let's just say 20, yeah, 24.5. Let's just say 24 just to keep it nice and easy, right? So let's say I put a buy order in here. So we know we are at a loss. We're down 25 basis points, yeah? Which to me is $250, remember, right? At that point there. But let's say I put a buy order in here. And let's say the price goes up to this order block here. That's a 31 basis point move. But remember, we have to then add this to this point as well. So you've got 31 minus 50. So 55 minus 31 leaves 25 basis points, right? But at this point, you'd then put a short order in here. Now remember, we're 25 basis points down. So price would only have to come back down to here to break even, rather than your original short entry there. So what was a loss, you gained on the long going to the upside. Your delta was originally about 25 basis points. You've locked in your loss at this point here because you've longed here and you're short in here. So whether the price goes up or goes back down, it doesn't really matter. You're always going to be 25 basis points at a loss. So the idea is that you're managing your risk based on a hedge position of where you think the market is likely to reverse. Now, of course, the price could just continue to shoot up, and then you have to just keep hedging. So you just hedge again and keep managing that process. So you've always got a locked amount. And remember, for things like futures, where you are in two positions, you may have one at a realized loss and one at a realized gain, simply because your funding rate, one will be negative but the other one will be positive, so they'll cancel each other out effectively. So you're always going to be sitting in this kind of delta delta position where you're sitting at a loss. It's just about looking at where you think the pivot point will be. Now, what might have happened is, as an example, so if I take this out, so going back here, it might have been that you know, this is your delta. We put a long order in here, right? Where's the long? We put a long order in here, right? But let's say the price, goes. Where are we? You know, so the price is, you put a long in here, but then the price goes like that. Well, realistically, you're going to be 50% down on this one and 50% down on that one. So you could choose to liquidate both positions here, right? Which is the same as which is basically just that, taking that loss on the chin for both the long and the short. Or you can let the price come back down. You can get out of that short at break even, and you're then sitting with a long here, but then you hedge again. So whether the price comes down or up, you're still back in that locked position. What you're trying to do is just constantly monitor the markets to figure out which way you think it's going to go and have a plan either side effectively. So we're in a tiny bit of profit at the moment, nothing spectacular. And for me, it's kind of looking like, you know, we've just had that move to the downside, probably based on volume rather than price. In fact, it was definitely volume and not price, because the price hasn't moved. And we're still got a bit to go here yet. I'd like to see us break this structure to the downside. That would be nice. You can see the volume here. Hedging's a really cool way for if you don't want to accept a loss and you're confident in managing. The important thing to realize is context, though. It can't be just locking in. You know, if the market's going against you and the continuation of that looks like it's going to continue to one way or the other, then you've just got to take the loss on the chin, really. But if you think that the position maybe you've just missed one of your market structures where you think, okay, I still think it's going to return down and it's going to go negative, or the price is still going to go down, then hedge and wait for the next pivot point, and then liquidate your put a short position in at that point, and then obviously you're going to be in profit on one of them, and then you can get out of that profit. And then if price starts to move back the opposite way like you predicted, then you're going to start to reduce your delta on your negative, which means you only have to go halfway, not right down to your original point to break even, because you've already made money on the move up. Then it's just about equalizing your profit on the way down. Now you've got to there's two ways to look at this, right? You can either leverage up your order on the hedge, which means theoretically you don't have to quite go halfway, because you are earning more money as the price is going up than what you are on the price going down. Or you can just keep them neutral. So if you've done 10x 10%, do 10x 10% on the long. That way at least it's always 50%. But like I say, there's loads of ways to manage risk, really. It's not just taking a loss on the chin. It's managing risk via hedging, whether you want to use leverage or margin. As long as you're still confident in the market structure, that's the key thing on all of this. Like right now, as I'm looking at market structure, we've stalled a little bit. Again, this may turn out to be a loss, which is fine. We just have to wait for another strong market structure setup, but we'll see. Hasn't done too much by way of movement in the past a few minutes. One of the good things to do this on really is the when New York opens, so not right at the start, but maybe 3 p.m. UK time, that is. I'd be looking to do some of this, because you've got volume, and when you've got volume, you get into good trends and good movements. That's best time to start doing it, really. The other thing as well is this is where psychology plays such a big part of not changing your mind every 2 seconds, because that's where you get wrecked. You have to think to yourself all the time, right? I had a plan. The plan was we have market structure, which is higher high, lower high, lower high, lower high. We broke this structure here. That was where we got in. If we break this structure, that would be more of a concern. This structure, another concern. But if I go to the 5 minute, let's just say, we're still very much in a downward move, from a structural perspective. So there's no reason to be concerned, even though on the 1 minute it looks less structured. On the 5 minutes, for me anyway, you can see we've still got this downward move. Just because this structure's been broken, realistically we're still down. So to take a small loss or anything at this stage for me is silly, just because we're still in play, and the market will tell us when we're not. Sorry. Is there any questions, guys? It's been very static for the past few minutes, that's for sure. Nearly 10 minutes of just literally staying the same price. So you've got to be patient. But it's like, as I say before, risking $1,000, this would see us about $250 loss, a quarter of our side hustle money, let's just say. Currently in about $10 profit, I think, something like that. But it would be an acceptable loss. Now we've just broken through, so now let's see where we go. Do we break this structure? That's still okay. Do we break this structure? For me, still okay. This structure, maybe starting to wane a little bit, but here's our loss. I mean, as I say, we're above. You got to remember, it's not just about structure. There's a couple of things that the market always likes to do, is to fill fair value gaps, which it can do. Yeah, I'm still okay on where we are. Just checking. Our loss is $250. Yeah. Okay. The only thing that's concerning me is just this 30-minute. But here's where we're getting divergence. We're seeing the MFI right the way down here, and we are seeing the Lux Algo the Lux Algo Premium indicator up here. But you know, looking at that structure, to me is bearish. It's like, okay, well, there's my 50% there. I wouldn't really start to get nervous until, yeah, we break that, because that could confirm that, you know, we are starting to move into an uptrend, but I don't think we are, not at this stage. 1 hour still, you know, heavily overbought. On the 4 hour, we're moving down in general. We came up, you know, what did we tag? Right at the right at that order block there, to the absolute button. So realistically, that's claimed. You know, you can determine whether you want to use the wick of the total, or the average, which is obviously the middle, or the candle close of the body, where you wanna determine that these are mitigated. But if you were using the average, then the average here would be 16,898, which it came and claimed. So you could expect, you know, this is a momentum to the downside. If it breaks the heart line, you'd certainly expect continuation. And the other thing that's gone in the favour is this, the stochastic RSI is also starting to top out. So I'm expecting at least moving back to the downside, maybe coming and reclaiming this VRVP line here. Do we have any key other levels? Let's see, do we have dailies? Daily up there. No, we have a daily down here. What about weekly? Weekly down here. No, not really too much to be worried about there. Get rid of them. Okay. Let's go back to the minute. Okay. Let's get rid of that. So I still think it's a sound position where we are. I still think we're looking good. For to hold this for a while longer, for sure. Maybe a bit of an M pattern starting to form here. you guys have any questions at all? I'm not currently looking at Discord, so I don't know if anyone's asking any questions or anything in the server, or if so, just maybe just jump on here. Feel free. Seems to be really struggling to break through this structure here. Patience. It's not always easy, patience. The easy way to trade is the way we trade. I don't think it's too difficult, if I'm honest, to make money trading. It's just day trading comes with a lot more risk, like this. But I think the way we DCA and average in or out is a lot less risky. Obviously the payouts aren't as strong and the payouts aren't as glorious, or if they do, you tend to have to wait longer for that, which is fine. We are, I guess, building wealth slowly over time, and compounding. But these are, I think they're just good. For me personally, the way I would approach it is I'd have, and I've said this, a number of times, I would have my main account, which is, my safety net, the less riskier trades, and the ones that I want to kind of keep a long time and follow the swing trades. And then I'd have me day trading account, or my altcoins account, or whatever you want to call it, where you're happy. I don't want to say happy to risk, but you're happy to lose an amount of money where it's not going to cause you too many problems. Because leverage in that scenario is amazing, because for $1,000, that sounds like a lot of money actually, but if you think for $1,000, multiply it by 100x, it's $1 million basically. And you could say, okay, well, I've now got the buying power of $1 million, right? So just because you've got $1 million doesn't mean realistically that your trade needs to be $1 million. I think that's the misconception a lot of people get with leverage. You think high leverage means I must level up. That means I'm going to trade on 100x. Really, if you break it down a little bit, that $1 million is now you've now got $1 million to trade, right? Because you've levered up at 100x. But because you've levered up with 100x, you can still trade 1 Bitcoin or 2 Bitcoin or 3 Bitcoin rather than 70 Bitcoin in one go. So it's like you can leverage up to have much more buying power, or you could leverage up to try and catch a really strong win, but know that you're going to risk a lot of heartache because you'll have a really low liquidation point. I mean, my liquidation point right now is up here. Yeah, that's not a but day trading on a minute by minute candle here, but up there, that would effectively render my account null. I would lose me $1,000 if that happens. But I'm trading right now with $1 million, let's just say. But really, I could lever up 100x, right? So that means I've now got $1 million. Well, 1 Bitcoin is $16,850. So I could lever up 100x, but just trade with 1 Bitcoin, which means that, okay, I might get liquidated, but it's only going to be liquidated on 1 Bitcoin. I've still got another 69 Bitcoin to play with. So leverage can be an amazing tool as well as a risk factor tool. I guess another way to put it is, if I had $16,800 in my account and I didn't want to use leverage, or I went with spot, right? Then my buying power is 1-to-1, which means if I buy on spot at a specific price, I buy 1 Bitcoin, right? And and then I'm just linked to the price of Bitcoin. If the price of Bitcoin goes up, I make money because I can sell that Bitcoin at a price higher than what I originally bought it at. If the price of Bitcoin goes down, I lose, but if I sell, I only lose the delta between what I bought it at and what I sold it at, if that makes sense. So that's that one-to-one idea. When you leverage up, if I take that same idea and go into futures, and I have that one Bitcoin cost, which is 16,800, but I multiply that by 100, well, now I have 100 Bitcoin. But if I use the leverage of 100 Bitcoin in one order, my liquidation point will be 100 basis points, which is just crazy. But if I just use the fact that I've now got 100 Bitcoin instead of one Bitcoin in the spot market, then realistically you can say, well, this trade I'm going to use 2 of the Bitcoins that I've got available to me. So now even though you've got 100x buying power, you're only using two of those Bitcoin rather than 100 or 5 Bitcoin. So if the price of Bitcoin goes up, 4%, that 4% where you only get, like on spot, where you'll have got one to one of your Bitcoin. So if the price of Bitcoin goes from 16,500 to 16,600, you've made $100. When you 100x leverage, if that makes sense, on your futures, so you've now got 100 Bitcoin instead of one Bitcoin on spot, but your futures, you place your long position, let's just say, with only 4 of those Bitcoin, because if you remember, you've got a slider that you can move left to right to say even though you've 100x'd, how much percentage of your order do you want to utilize on this specific order. So you may, of those 100 Bitcoin, you may only use 4 of those Bitcoin for your order. If the price goes from 16,500 to 16,600, you've now made $100 for each of those moves. So then you've got, $400 rather than $100 on the spot, yet you're only risking 4 of those Bitcoins. So yeah, your liquidation level will still be relatively close, but you're only risking a very, very small proportion of that fee. That's just a mentality thing. I hope I've kind of got that across well. It's of an understanding basis. It's more around, a lot of people will just use leverage as a way to say, max leverage, max percentage, big order. That's one way to do it, but the other way is to just think about it as buying power. So you've got one Bitcoin, or you've got $100. You 100x that $100. That becomes, what is it, 10k? Is that 100 times 100? Yeah. Is it 100k? God, my maths is terrible. Let me just figure that out. Times 100, yeah, 10k. So your $100 is now $10,000. Yeah, so you could use that $10,000 as buying power. You couldn't quite buy a Bitcoin, but you could do half a Bitcoin or 20% of a Bitcoin, and you could trade that rather than your $100. Ultimately, the maximum you're ever going to be at risk for is that $100. If the price goes against you and you get liquidated. But still, that's the power of leverage. Right, so we are now in profit, which is good. I'm not going to start moving my... The only time I would move my stop loss is if price starts to do this, right? So price comes down and breaks this structure here, right? Which is your lower low. Then we come back up to retest, and then we move down. Then what I would do then is I would bring my stop loss above here. If we done another structure which was like there and then went down, my stop loss would then be here above this structure, and so on and so forth. So each time we come and come back down and claim new structure, we are essentially building new highs, and then if we break structure and we come back up, let's say, and we break through here, well then the end of this momentum is over. So that's fine. I'm getting out at that point, because realistically it's risky to hold on, because now it might be okay. Well, now we get in we start to look at a long when the price does that, and this would be our entry, and then we're moving on, so on and so forth. So it's the wonderful thing about day trading is, yeah, it doesn't really matter which way the market goes. You're in and out. The moment structure breaks, you change direction and you're moving on. So right now we are in very small profit. Let's just for kicks see what that is. So it's a short position. Here's our entry. $10 per buy. So at about $45 in profit right now. Not significant. If we lose $250. That's fine. Any questions on anything, guys, by the way? Let me just go ahead and check Discord in case anyone's got anything to say. No, if you don't, by the way, just drop it. You can drop a question in the Patrons Hangout or whatever if you don't want to speak. So right now, as I say, nothing's really changed. The structure is still showing, bearish. It's a bit choppy. Really, you'd want to get in a much more defined, I guess, structure. And maybe you'd say, okay, well, right now, until we break out of this or this, I'm really not going to consider a move, because we had this move down, we consolidated, moved down, and now we've kind of moved a little bit up, and we're more like consolidating at the moment. But we shall see. One of the interesting things that would define it for me is if we do, is this going to come and claim the fair value gap before retracing? Yeah, this would be a good area to see break. That was more of a little bit of a liquidity grab there. You learn a lot by doing this, by the way. You learn a lot about structure, market structure on this is the minute by minute time frame. Really, it's just a micro version of the macro picture. We see this normally playing out on a longer time frame, but it's really good practice to just sit and watch the charts for a period of time, and to just see how price reacts to certain levels, and then you start to see, like, okay, well, that's interesting, we didn't break above that, and you appreciate risk a little bit more when you see, okay, well, okay, the price is going against me now. However, the only time I would get a little bit nervous is if we break structure. Until we break structure, realistically, it's nothing more than a correction, and a correction is something that always has to happen anyway. Just like a living, breathing animal, you can't terrible analogy, but if you are running as fast as you can, I always use this one. There's a point at which you have to stop and catch your breath. That's really a correction before you can, push on and carry on running on again. So, but this could have been a correction. As I say, had to move to the downside, corrected, and now more move to the downside is possible. So down, correction, so on and so forth. Or it could continue higher. We haven't realistically, like I said before, everything's about probabilities, but we if we're taking a small time frame, but we haven't come back and claimed that 0.5. Oh yeah, we have. My apologies. That's good. That's good, because that tells us that we've officially, let's just say, we've reclaimed the 0.5 area, which traders always like to come back and kind of reclaim that point, which if you take your low to your high, then it's a good thing that it's been reclaimed. Just because that takes off the table the fact that we have to have another move to the upside, at least to that level, which is why, you know, I'm right now, my stop loss is just above the fair value gap here, and just above the, well, just where that 0.5 is, but the 0.5 has already actually been taken, which is good. As I say, I think we're in about maybe $45 profit, something like that at this moment in time. So nothing too crazy. $55 profit. But you know, the idea here is, look, $500 a day keeps the day job away, right? So, you know, for me to get $500, well, where would the price need to go? So we need there. That's where price would need to get to for me to get $500. Now that's not, you know, if I look at that on the macro time frame, let's say on the hour, you know, I mean, that's nothing, is it? That's just a blip. We need to come back and reclaim some of this massive overexhaustion. You know, right now we are overexhausted on the 1 hour, approaching the top end of the stochastic RSI. You could argue that this was a bit of a push to the upside, then a little small reclaim, and now we're going to start to see some more momentum to the downside. So I don't think this is a difficult thing if you understand obviously the structure. This is where our liquidation level is. This is obviously our entry, and now we're starting to move down, which is nice to see. Back to that 1 minute. Currently we're in what's that, $90 profit now. So where would I mean, right now I wouldn't consider moving anything in terms of my stop loss, just because could quite easily come back and wick out, and then you should have took profit. You should have been sitting on a nice nice profit when you've been wicked out. So that would still remain there. The only time I would start to move this down is when we broke this structure here. Yeah, you can see where we have lower lows. We have a small correction which we anticipated, and we got our entry there, which wasn't bad. We had these couple of little higher levels here that came in, but ultimately on the face of things, I'd be quite happy with that entry, to be fair. And how did we do it? If you remember, we looked at structure. So we had higher high, lower high, lower high, lower high. I didn't like this little particular market structure, so I wanted to at least look at, you know, being lower than here but higher than there, which I kind of, you know, put it to the middle. Now we're on our way down. We're currently in, what's that, $125 profit. This would be ultimately our place to go. We're moving down. Now if we break this structure, I'd want to see us come back and retest it. But, you know, I'd be happy if we did come and retest it to bring my my stop loss down at least to break even, so we guarantee ourselves not that we wouldn't be in a loss. But for now, we're just gonna remain here for now. And you might say, well, why is this the target? I mean, it really, it doesn't have to be. Like I say, it could be a break of structure, which, you know, right now, if this plays out like I said, you know, we come down here, and this is where we then start to come back up. We come and retest this, and then we go down again. The only time I would want to come out of the trade is if we break structure, because this is the point at which, you know, you'd have your stop loss here nice and tight wherever the retest comes back in. So that's just sensible management of trades. It's not clever. So how we doing now? We're currently in, let's see, $140 profit. For what? How long have we been doing this session? I don't know, not long really, less than an hour. If there's any questions, feel free to raise your hand, or just drop in when you want to. But like I say, it doesn't have to be complex. I think trading, is just about understanding the basics, understanding market structure, looking at the wider picture, of course, because you don't want to be caught out on on something that can catch you out, i.e. if the longer time frames like the hour and the 4 hour and everything else is really looking overbought, and you're looking at the 1 minute time frame because it looks bearish, then you'd be wanting to wait until market starts to reverse and then jump in on your 1 minute time frames, look for longs. So we might come up and retest this area now, which I'd like to see. So somewhere around here. Oh, maybe not. So we're gonna come and claim. So this is if we break this structure here, this will be a nice structure to break. Really wants to, but it's clearly a tough area to break. Looks like it wants to break. Currently in at $190 profit. We want to see another nice move to the downside, if possible. Breaking this structure and then coming back up and retesting this. That would solidify, at least in my mind, that there's more bearish continuation on the shorter time frames. No, that's just the $500 target, wasn't it? So we, the idea of this was to just jump on, find market structure, get in at an entry, and then manage it down to $500. Realistically, you don't have to take that $500. We could just continue to manage this down as it plays out. Because when you get on a good, specifically with day trading, when you get on a good move, you don't want to let that go until the market lets go rather than you. So as I say, where would be a good place to expect another bounce? So I think here somewhere around that 16,838. However, this is a double bottom. That would be a concern for me. Yeah, so I would want to see that this breaks. If this breaks, I'd be a lot happier. Yes, baby, there you go. So there's the break. Now that's a good move. It shows bearish momentum, because that was a tough area to break, to be honest. But it has broke. That's $205. This thing could continue. Yeah. Look, I mean, look, this order block's just opened up here now. Yeah, 16,800. Would it be a good idea to take profit? It's one of them, mate, innit? I mean, realistically, so we've came back and claimed that area. Do we continue to the upside or what? I don't know. It's an hard one, because we average into these ideas so that we average a move. However, what we can never tell is, okay, you put in 4 or 5 orders in terms of your DCA levels. You plan for the worst case scenario, being that you'll move to the uppermost level, right? But your average entry will be fine, because yeah, you'll be in a loss, but you're anticipating that if it has come up that high, that it's massively overbought, there will be some sort of a correction or move to the downside, that kind of thing. However, it may not happen, and I always think if we favour short side gain, short-term gain because we're in profit, we may miss the fact that we've got an amazingly great move that could go right the way back down to like 16,200, and your profit would have been fantastic, but you favoured a short-term benefit because you were nervous that, or we thought, you know, price can continue to go to the upside. So I'm not personally, I'm not a fan of when I do the TA for the longer term swings on BTC. I try to think about a bit more of a macro event where can price retrace back to. Obviously, we're using things like the Elliott waves and the ABC correction to determine where that might be, but it might not play out, which is why we're DCAing. So maybe it only plays out to 50% of them orders, to two orders get filled. Okay, but if the move continues down, at least we've got some level of orders filled for us to hit our TP. Now, I'm never going to tell you what you can and can't do, by the way. It's your money, and if you want to, the risk you take is the fact that you take money early off the table and you don't have it for the longer term. However, like I always say, there's no such thing as bad profit, mate. So, even if we analyze, I mean, look. The 0.5 is 17,355 or $17,375. That's the whole move from our recent high before FTX came in and doused everyone's flames, let's just say. So you can. That is the for me the uppermost target where I expect BTC to perhaps can go. Within a bearish macro trend ultimately, which is why I think longer term, we shorter term we can come up and favour a move to the upside for sure. However, it might not. Doesn't mean that the 0.5. It's not like if rules played out like this all the time, then everyone would be millionaires. It's a plan, isn't it? You put a plan together, you think, okay, well, what other good ideas could you have? Well, actually, there's a fair value gap here, which we know there's an imbalance in the chart, which let's say it's a vector candle at this 17,222. I've marked that in the charts in our in Discord. That's an area that I've picked on. I'd also have an additional higher order at this 17,371, just because if we're going to continue to go up, then that is that's my absolute top that I think it will go. I really don't see it going as high as the golden pocket, although it wouldn't be out of the question, by the way. It's not like it would never go that high. However, a lot of this is built upon the fact that our liquidation points should be at least in the upper 18k regions, which that would be fine. I mean, I don't think we've got anything to worry about there. But as I say, for me, it might not happen. We might just, this might just be nothing more than a small correction from this initial, which would be one. I mean, I covered this yesterday, but that would be your Elliott one wave. Let's see if I can just make this a little bit harder. Your Elliott one wave would come here. This would be your correction to 2, and then you're going down to 3 to this kind of 14 area. 4, would be here, and then down to like 13, 14k. As to when that would be, could be Q2, Q3 of 2023. It's a longer term move, but then within these longer term moves, you have more Elliott waves and more corrections, whether it's ABC, WXY. All of these things have like 5 waves within them, and then a 3 wave for your correction, and another 5 wave. So all I'd say is this, if we take an ABC correction from an Elliott 5 wave, what you're expecting to see. I mean, this was supposed to be on day trading, but hey ho. This would be 1, and you'd expect that should have been 5, but this would be 2. So you'd have 3, and you'd have 5. I'll tell you what, that's just absolutely shocking. One, 2, 3, 4. Let's just say 5 there, but let's just assume something like that, and then you're saying, well, where would how would you determine where your 5th wave would go? Let's say, rudimentary, you say 0.5, right? And when that will hit, who knows? We're not sure yet. Right, and then you'd say, okay, well, what about your 3rd wave? How do we know how far that could go? Well, you could go, you take your high to your low, back to where you think your wave would be, and then you're either looking at your 1-to-1 or your 1.272 or even your 1.618, which would be here. So your 1.618, which is really where your fib extension likes to go to, could be the case. And then maybe we go back to the 1-to-1, and then we come back down to like your 12k, which kind of feels like where that bottom point would be, just because there's a load of different TA and analysis which we can cover on a different session, but very possible. So with that, I'd be more confident that we can expect maybe that we come up to this kind of 17,200 mark, but we don't know, do we, ultimately? So you can only put a plan out and execute it, but that looks a very favourable kind of plan as I see it. But let's see where we are anyway, because we need to get back into our day trade. Are we at a loss now? Are we still in profit? Oh, we're still in profit. So this is good. This is the retracement we want to see, because now we can say, okay, well, what would that retracement look like there? Oh. You can come to here, bring it down. Well, we're already at the 0.5, and as you can see, it's providing a little bit of resilience at that. Guys, I'm just going to take a literally 2-minute pause while I go and grab a quick cup of coffee and bring it back upstairs. I'll leave everything running. I'll be literally 2 seconds, okay? back online. So this is where we are now, what we call the golden pocket, right? So that's 0.618 to 0.65. This is another area. So 0.5 is your is your goal, but the golden pocket is also a nice area where traders like to get to before we see a retracement. So just remember that. You can actually add that on as well if you want. So you can 0.5, 0.618. So I could theoretically make this 0.65. Actually, I forgot that number again. My bad. 7. So you make this one 1. You make this one 786. You make this 0.65, and we make this. When we make this yellow, make this yellow, make this gold. So that's the golden pocket, but the 0.5 is the area. So I'm gonna template save as number 1 fib fib retrace, and I'll just put it new because I like to have that in. Okay. So that's now my golden pocket, that little fib area. Now the other thing I like to do is have my values on the right hand side. I like the numbers to be quite maybe not that small. Yeah, nice and small. Okay. Now I can delete that one and then save as